Hello viewers, welcome to my channel. I'm Hashim Ali Khan here. Right now I'm giving the lectures on the subject income tax 2. In this subject already I have uploaded the videos on the topic capital gain. How to compute income from capital gain, what is the procedure, how to calculate long-term, short-term capital gain. All the provisions of income tax I have explained in the previous video, and almost 21 problems I have solved on computation of capital gain. My regular viewers already might have watched all the videos, got a command on how to calculate capital gain. Now I'm going to start the next topic of income tax, that is income from other sources. So if you have not watched the previous videos, I suggest you to go to the playlist of my channel. I have uploaded so many subjects videos. Select your subject, like for example this income tax 2. Select income tax 2, in that you will find capital gain. Select capital gain, watch the video, get a command on this topic of income tax, capital gain. Now I am going to start the next topic called income from other sources. Remember, Income Tax Act is very interesting, and also many students will think that it is a tough subject. It's not tough. The only thing you have to remember the provisions. You have to take the interest in the subject. The whole the subject depends on the provisions. Until and unless you remember the provisions, you cannot solve the problems. The problems depends on the theory provisions. So carefully, without any break, without skipping, watch the video till the end to get a good grasp on each of the topic of income tax. So now I'm going to start the next topic called income from other sources. In this video, I'm going to explain you the detail regarding what are the items that will appear under this income from other sources. Now, first of all, Income Tax Act has given 5 specific heads of income. The first 4 are the specific heads: income from salary, income from house property, profits and gains of business and profession, income from capital gain, income from other source. 5 heads. So first of all, we have to check whether an income will fit in the first 4 heads or not. Is it an income which can be chargeable under the head income from salary, or is it the income which can be chargeable under the head income from house property or capital gain or business or profession? You have to check. If it is falling in any one of the 4 specific heads, then definitely it is chargeable under that specific head. Otherwise, if an income is there which cannot fit in the first 4 heads, it will be chargeable to tax in this income from other sources. That's why this head of income is the head of the last resort. Meaning, if the income cannot fit in the first 4, lastly it will be fit in the last. It is called residual head. So ultimately, lastly, if it is not fitting in the first 4, it will be chargeable under the head income from other sources. Example: if an income received by a lecturer, suppose he is a lecturer in a college. So there is employer-employee relationship between the lecturer and the college management. So in that case, the salary received by the employee, by the lecturer, is income from salary. Apart from that, if the lecturer is a part-time lecturer in another college where he is getting some amount for completing the syllabus, it's a contractual amount. There is no employer-employee relationship. There is a contractual agreement. So amount received for giving this part-time lecture is income from other sources. Similarly, the salary received by MPs, MLAs, it is known as salary, but it is not taxable under that salary. It is income from other source, because there is no employer-employee relationship between the payer of salary and the receiver of salary. MP and MLA, they are not employees of the government. They have been appointed by the public. So salary received by MPs, MLAs will be taxable under income from other sources. Similarly, the lecturers, they will get some amount for setting up the question paper or evaluating the answer sheets. This extra money which the lecturers will get, that is taxable under income from other sources. Similarly, income from house property. The basic criteria for putting the income under the head income from house property is the ownership of the property. If the SSC is the owner of the property and let out on rent, then he is getting income from house property, that is chargeable under that income from house property. If a non owner is getting the rent. For example, subletting. Already a tenant is there. The tenant has sublet the property to another person and getting the rent. So actually, tenant is not the owner. He is getting the rent. So rent from subletting will be taxable under income from other sources. Similarly, profits and gains of business or profession. Any activity which has a risk. So income earned from risk-bearing activity other than chance element, that is called business income. Similarly, professional income like doctors, engineers, chartered accountants, they will earn the income from their profession. So that will be taxable under income from profession. Capital gain. If a person transfers the capital asset during the previous year and gain arised, that will be taxable under the head income from capital gain. So like this test we have to apply whether the income is fitting in any one of the four heads or not. If it is fitting, well and good, it will be taxable in that specific head. If an income does not fall in the first four heads, definitely it will be taxable under that income from other sources. So we cannot give complete all the incomes which fall under this income from others. Any income which does not fall in the first four will be put to tax. But here we can give few examples. I am giving you some examples of income which are taxable under the head income from other sources. So see here. Examples of incomes which are included under the head income from other sources. Few examples you have to remember. Now, interest on securities. This is the main item which will be taxable under the income from other sources. Interest on securities. Securities are nothing but the bonds issued by the government and debentures issued by the companies or corporations. So debentures issued by companies and bonds issued by the government are called securities. When a person invests his money, makes the investment in securities, he will get the interest. So interest on security is taxed under the head income from other sources. Similarly, dividend on shares. There is a lot of provision regarding dividends. Some dividends are fully exempted, some dividends are taxable but exempted up to a certain limit. That I'll explain you while doing the problem, which dividend is taxable, which dividend is exempted. Interest on debentures issued by cooperative society or club. If the debentures are issued by cooperative society or club, then interest is received, it is taxable. Interest on bank deposits. When a person has deposits in a bank, he will get the interest. The interest on bank deposit is also taxable under the head income from other sources. Then casual incomes like winning from lottery, crossword puzzles, etc. So there is a specific provision in Income Tax Act regarding casual incomes. Casual incomes are the incomes which are earned by an element of chance, luck and chance. Example of these casual incomes are winning from lottery, crossword puzzles, horse races, card games, and different types of TV programs. All these will come under casual income. And casual income is also taxable under the head income from other sources. I'll explain you the detail in this video itself. Then any sum received by the SSC from his employer as contribution to any staff welfare scheme. The employees have contributed some amount to staff welfare scheme. Later on, the employer has paid some amount to the employee from the staff welfare scheme. That is taxable under that income from other sources. Rent or hire charges received by letting of plant, machinery or furniture. Sometimes an SSC will let out his plant, machinery, furniture and receive the hire charges. That will be taxable under their income from other sources, provided it should not be his business. If the SSC's business is to let out on furniture, just like supplying companies are there, they will supply all the crockery items, tents, etc. That's a regular business. They will supply all this furniture on rent. It's a business income, not income from other sources. But if a person's business is some other business, but in a particular point of time, he has let out his furniture on temporary basis, he has let out his plant and machinery on temporary basis, then in that case the hire charges received from letting out of plant, machinery, furniture, that is taxable under the income from other sources. Rent from subletting the house. Actually, the owner has the right to let out, to give on rent the property. I am the owner of the property. I have let out my property on rent. I am the owner. So whatever rent I am getting, it will be taxable under the head income from house property. Whereas you are my tenant. I have given the complete building on rent to you for a monthly rent of 20,000. The monthly rent you are paying me 20,000. I am getting 2,40,000. So per annum 2,40,000, it is taxable under the income from house property in my computation. Whereas a part of the property you have sublet it. You have sublet. I have given the authority to you. I have given the authority to you to sublet the part. So a part of the building you have sublet and you are getting the rent. So whatever you are getting the rent, that is called subletting rent. And that subletting rent is taxable in your hands under the head income from other sources. Then royalty received. Royalty received. When the royalty is received on like books published or in case of mines, etc., or ores, etc., in that case the royalty received is taxable under the income from other sources. Directors' fees. Directors are not the employees of the company. So directors' fees received is taxable under their income from other sources. Examination remuneration received by a teacher. Actually, teacher will get the salary from the school or college. That salary is taxable under their income from salary. But apart from that, the teacher will get some other amount for setting up the question paper, for invigilation of the examination hall. So this extra payment which he is getting is taxable under their income from other sources. Then agricultural income from foreign land. There are specific provision regarding agricultural income in India. In other video, I'll explain you what is the chargeability of income tax on Indian agricultural income. But here it is saying agricultural income from a foreign land. From a foreign land, it is taxable in India. Example, a person, resident and ordinary resident in India, but he is having some land, agricultural land in Australia. So from there he is earning some income. So it is said it will be taxable in India under the income from other sources. Then rent from land. See, rent from house property and rent from land is different thing. House property means some structure should be there. Walls, roof, all these ceilings, this will be there. Then the structure is there, it is called house property. If open land is there, for example, I am having an open land, I have let out on rent for garage like that. So in that case, the rent received from open land is taxable under the income from other source. Commission received, commission on cheat funds or commission on insurance, etc., that will be taxable under income from other source. Remuneration received by MPs and MLAs. I told you, the salary or any remuneration received by MPs, MLAs is taxable under that income from other source, because there is no employer-employee relationship between the payer of the salary and the receiver of the salary. Then interest on loan given. Normal circumstances, an SSC may give a loan to any other person and receives the interest. That interest is also taxable. Then interest on income tax refund. Sometimes an SSC may pay excessive income tax. Advance income tax paid is more or TDS is more. In that case, amount is refundable to him from the income tax department. Sometimes income tax department will make a delay in refunding the excess amount of tax to the SSC. In that case, interest will be paid by income tax department to the SSC. That means SSC is earning the income. From whom he is earning the income? From income tax department. Income tax department has delayed in refunding the tax amount due, excess tax amount. In that case, interest on refund of income tax is taxable under the income from other source. Next, gift received on or after 1/10/2009, either in cash or in kind, excess of limit mentioned. So Income Tax Act says any gift received on or after 1st October 2009, either in cash or in kind, is exempted up to a certain limit. In the coming video, I'll explain you what is that limit. Over that limit, it is taxable under income from other sources. Then forfeited advance money received on transfer of capital asset after 1/4/2014. This point already I have covered in the previous video, capital gain. If any advance amount is received in sale agreement and later on the agreement is not materialized, so advance money forfeited before after 1/4/2014, 1st April 2014, any amount forfeited, any advance amount forfeited in a sale agreement is taxable under income from other source. So I have taken these examples of incomes which are taxable under income from others. Don't think that these are the maximum exhaustive list. It is not exhaustive list. It is only illustrative list. Examples are there. Apart from that, any income which does not fall in the first four heads is taxable under the income from other sources. Now I am coming to the point. Actually, all the income from other sources will divide our discussion on two topics. The first topic is interest on securities. The second topic is all other incomes other than interest on securities. Because the complication is there in calculating the interest on securities. So first we will discuss the provisions regarding interest on security. Already I told you security means the bonds issued by government and debentures issued by companies are called securities. There is a specific procedure how to compute the interest on securities, right? So here, types of security, all the securities are divided to three categories: securities exempted from tax, then tax-free securities, and less tax security. So for computing the interest, we classify the security into three categories: exempted from tax security, tax-free security, and less tax security. Now I'll discuss you what are the exempted from tax security. This first category, exempted from tax securities, are those securities on which the interest is completely exempted. The securities on which interest is completely exempted, no tax is applied. No tax is applied. We will not compute the interest on these securities. We'll just write a note that interest on these securities are fully exempted from tax. So normally this security will be issued only by the government. Only by the government they will issue this security on which interest is completely exempted. Again, I'll give you the examples on which the securities that interest is exempted. 12-year National Plan Saving Annuity Certificate. Just if you listen this, then it will be in your mind while solving the problem. When you come across, immediately you should say that interest on this security is completely exempted from tax. No need to take it into a computation. We'll write a note. Then 12-year National Plan Saving Annuity Certificate, Treasury Saving Deposit Certificate, Post Office Cash Certificate, the National Plan Certificate, National Plan Saving Certificate, Post Office National Saving Certificate, Post Office Saving Bank Account, only to the limit, Post Office Cumulative Time Deposits, NRI Bonds 1988 issued by SBI, NRI Bonds second series issued by SBI 1988, 10.5% tax-free bonds of HUDCO, 9.25% tax-free bonds issued by Rural Electrification Corporation, then 10.5% secured redeemable, then a non-convertible tax-free bonds issued by National Hydroelectric Power Corporation, then tax-free Ahmedabad Municipal Corporation bonds and Nagpur Municipal Corporation bond, 8% tax-free bonds of India Infrastructure Finance Company Limited, then secured redeemable non-convertible railways bonds issued by Indian Railway Finance Corporation. So these are the examples. These are the examples of incomes which are completely exempted from tax. So in this part I have explained you the introduction to income from other sources, what are the incomes that may be taxable under income from other sources, and what are the securities on which interest is completely exempted. So we have discussed the types of securities. For computing the income from interest on securities, the Income Tax Act has classified the securities into three categories: exempted from tax security, tax-free security, and less tax security. So just now we have discussed about the exempted from tax security. So those securities on which the interest is completely exempted, the interest will not be computed and it will not be taken into consideration in calculating the total income. Simply we have to write a note that the interest on these securities is completely exempted. So just now I have read out what are the items that may come under exempted security. Now I am going to discuss about the tax-free security. The second classification of security is tax-free security. So here you can see tax-free security, tax payable by the holder of this security is paid by the security issuing authority. The tax on this security will be paid by the issuing authority. Now issuing authority means who will issue the security. In the previous video I have explained you, the securities can be issued by the government. Security means the bonds issued by government and debentures issued by companies. So bonds and debentures, these two are the securities. So issuing authority are either the government or by the commercial authority. So in case of tax-free security, the tax on this security will be paid by the issuing authority. If the security is government security, government will pay the tax. If the issuing authority is commercial authority, commercial company, suppose company is there, so company will pay the tax on this security. That's why it is called tax-free security. The SSC need not pay the tax. The SSC's tax on security will be paid by the issuing authority, either by the government or by the commercial organization. So that is paid by the government in case of tax-free government security and companies in case of tax-free commercial security. So we divide the securities into two categories: government security and commercial security. Government security are those security which are issued by the government. Commercial security are those security which are issued by the companies. So tax-free security, the tax will be paid by the government or by the companies. Now gross interest will be included in the total income. Now we have two concepts: gross interest and net interest. If tax is deducted, then we'll get the net interest. If tax is not deducted, it will be called gross interest. While computing the income from interest on security, we always take gross interest. Now, tax-free government security. First, we'll discuss how to calculate the interest on tax-free government security. Remember, these provisions are very, very important. You have to remember, because these provisions we are going to apply in the problems. So how to compute the interest on security, I am explaining here. First, you have to see if it is a tax-free government security. If you see the wording tax-free government security, then you have to remember gross interest is equal to face value into rate by 100. Face value into rate by 100. For example, in the problem you will come across the investment of the companies are rupees 1,10% tax-free government security. If these are the wordings given in the problem, rupees 1,10% tax-free government security. So first of all, you have to see it is a tax-free government security. How to compute the gross interest? Face value. What is the face value of the security? 1 lakh. What is the rate of interest? 10%. So 1 lakh into 10 by 100, 10,000. So 10,000 is the gross interest. So you have to see whether it is tax-free government security. If it is tax-free government security, gross interest is equal to face value into rate by 100. Now tax-free commercial security. If government word is not given, only tax-free security is given, that means it's a commercial security. Or in other words, it is given tax-free commercial security, tax-free security of so-and-so company, then it's a tax-free commercial security. If it is a tax-free commercial security, then two steps you have to follow. Two steps you have to follow to calculate the gross interest. The first step is calculate the net interest. Net interest is equal to face value into rate by 100. Face value into rate by 100, what you get? Net interest. Then you have to gross it up. For gross interest, the formula is net interest into 100 by 90. Net interest into 100 by 90, assuming that income tax rate is 10%. Income tax rate is 10%. So net interest into 100 by 90. That's all. These are the provisions regarding tax-free securities. Tax-free security. So first of all, tax-free securities are two types: tax-free government security, tax-free commercial security. For tax-free government security, very simple. Gross interest is equal to face value into rate by 100. If it is a tax-free commercial security, two steps you have to follow. The first step, calculate the net interest. Net interest is equal to face value into rate by 100. After calculating net interest, gross it up. Gross interest is equal to net interest into 100 by 90. That's all. So these provisions we are going to apply in the problems. Now less tax security. This is the last category. Less tax security, or the total interest due to the security holder, tax is deducted by the issuing authority. The interest received by the SSC is the net interest, and the same is to be grossed up. This security can be issued by both by the government as well as commercial security. See here, less tax security. If in the problem the word tax free is not given, then we should assume it is a less tax. If nothing is given, only bonds of XYZ company, debentures of XYZ company is given, nothing given regarding less tax or tax free, so you have to assume it is a less tax security. In less tax security, the tax will be deducted by the issuing authority and the investor will get only the net interest. For example, you have purchased less tax security. 1 lakh rupees is the face value of the security, 10% is the rate of interest. 10% is the rate of interest. So 1 lakh into 10%, 10,000. So your total interest is 10,000. But the company will not pay you 10,000. On that 10,000, 10% tax is deducted. 10% tax is deducted. So 10,000 into 10%, 1,000. From 10,000 rupees interest, 1,000 rupees tax that will be deducted by the company. And the net amount of 9,000 rupees will be paid to the investor, to the SSC. The SSC will receive only 9,000 instead of 10,000. 1,000 rupees the company has deducted income tax on this interest. These are called less tax. So tax will be deducted by the issuing authority and the net interest will be paid to the investor in this less tax security. So how to compute the interest, gross interest on less tax security? Very simple. Whether it is a government security or whether it is a commercial security. Remember, less tax security can be both. Less tax security can be both either government or commercial. So in both cases, less tax security, government or commercial, in both cases, the gross interest is equal to face value into rate by 100. Face value into rate by 100. That is the formula to calculate the gross interest in case of less tax security. Now deductions under section 57. The Income Tax Act has allowed two deductions under section 57. The two deductions are, first, collection charges. Sometimes what will happen, the investor or SSC will pay some collection charges for collecting the interest on security. Collecting the interest on security. Example, I am the investor. I have so many securities invested in different securities. So all the securities, I will not collect it. I will give the authority of collecting the interest to the banker. I have given the portfolio to the banker that I will get the security from all these securities, collect it and deposit in my bank. Banker will make some charges for their services. These are called collection charges. Collection charge. It's an expenditure incurred by the SSC to collect the interest. Income Tax Act says it is allowed as deduction. So collection charges, actual amount paid is allowed as deduction. Now second, interest on loan taken to purchase the security. When an SSC has taken a loan to purchase the security, then he is having interest income as well as interest expenditure. For example, I have taken a bank loan of rupees 1 lakh. The banker is charging me 15% rate of interest. So I am paying 15,000 rupees to the bank as interest. That 1 lakh rupees I have invested in a security. On security I am getting 20% interest. So I am getting 20% interest from bank and I am paying 15% interest to the bank. I am getting 20% interest on securities and paying 15% interest to the bank. In that case, Income Tax Act says interest paid on loan taken to purchase the security will be allowed as deduction. Will be allowed as deduction. So on 1 lakh rupees, I am getting 20,000. on 1 lakh rupees of investment in securities, I am getting 20,000 rupees interest. From that 20,000, I am paying to the bank interest on loan 15,000. So Income Tax Act says deduct 15,000. 20,000 rupees you have received the interest, 15,000 rupees you have paid the interest. So 20,000 minus 15,000, 5,000 rupees will be included in your income. So any interest paid on loan taken will be allowed as deduction, provided some points are given. Actual interest paid is allowed as deduction. If loan is taken outside India, then TDS should be made. If TDS is not made, no interest will be allowed if it is paid outside India. Secondly, if interest is paid to buy exempted security, no deduction is allowed. If a person takes a loan to purchase exempted security, the security on which the interest is not at all taxable, so interest paid will not be allowed as deduction. For example, I have taken a loan from bank of rupees 1 lakh. From bank I have taken a loan of rupees 1 lakh. 15% is the rate of interest. Of that 1 lakh rupees, I have purchased exempted from tax security. Exempted from tax security. Income Tax Act says whatever interest you have paid to the bank, that will not be allowed as deduction. Thirdly, interest paid is allowed as deduction even if interest is not received on the security. If you have not received interest on security, then also the interest paid to bank will be allowed as deduction. Example, I have taken a loan from bank of rupees 1 lakh. 15% is the rate of interest I am paying to the banker. That 1 lakh rupees I have invested in security. But on that security, I didn't receive any interest. I have not received any interest income from that security. But Income Tax Act says you have paid 15,000 interest on bank loan, that will be allowed. Even if you have not received any income, interest paid will be allowed as deduction. Then commission paid to purchase or sell the security will not be allowed as deduction. If the SSC pays the commission, brokerage, etc. to purchase the security or to sell the security, that brokerage commission paid will not be allowed as deduction. Only two deductions are allowed under section 57, that is collection charges and interest paid on loan taken to purchase the security. That's all. So we have completed the first part, that is interest on security. Actually, income from other sources, so many incomes are there. There are unlimited income. Any income which does not fall in the first four heads, that is taxable under income from other sources. So we cannot give an exhaustive list that these are the only items that will be taxable under income from other sources. No, we cannot give. Any income will come. So example, the most commonly found income is interest on security. And how to calculate interest on security? Provisions are given. I have explained you all the three. Exempted from tax, tax-free and less tax. Now we'll solve some problems. Apart from that, the other incomes are like hire charges received on letting of plant, machinery, family pension or commission on insurance companies. Like this, different types of other income, subletting, income from subletting, all these are miscellaneous other incomes which will found in income from other sources. That I'll discuss. But before that, what is the format of computing the income from interest on securities? How to compute income from interest on security? I have given the format here. Format of computation of income from interest on security. Particulars, amount. Particulars, interest on tax-free government security. We calculate interest on tax-free government security. Take it in the outer column. Then interest on tax-free commercial security. Whether it is listed or unlisted does not make any difference because both provisions are same. Whether the security is listed or unlisted. Then interest on less tax security. Then interest on less tax commercial security, listed or unlisted. Then total gross interest on security, 12 lakh. Gross interest on security will take the total. Then deductions under section 57. Collection charges will take it in the inner column. Interest on loan taken to purchase the security, inner column. Take the total in the outer column. Deduct it, will get income from interest on securities. So in this format, we are going to calculate the income from interest on securities.